BNB is forming a 5-wave perfect sequence to the upside in terms of Elliott waves. What typically unfolds? Well, that's what we're going to dive into today. And if you want to learn more about Elliott wave, I've actually created a free Elliott wave masterclass, which is in the description link below. But we're going to really go into some detail today on the current pattern position with BNB. So if you like today's content, like, subscribe, hit the bell notification. But let's dive straight in. All right, so what I've done is I've taken data from yesterday and I've taken it back just around 24 hours. And the pattern position of yesterday, if you're not familiar with Elliott waves, markets tend to move in 5s and 3s. And what I mean by that is, if we just line this up perfectly there, is the market typically, what you'll see time and time again, whether it's BNB or whether it's Bitcoin, whether it's Ethereum, you'll see these patterns on macro movements, but also micro movements. Typical 1, 2, 3, 4, 5s, followed by what looks like an A. It looked like a B was forming, and what do we anticipate? A wave C. However, we had a question mark up here because what you want to have is a high probability entry strategy. What should the market do if this is what we think it is? If this is going to occur, how do we make money off this, shorting the market, making money on the way down? Well, a simple strategy is buying or selling in terms of getting into the position on a swing low, right? So I like to have my entries as a green. So we simply say, if and only if the market goes below a major swing low, do we get into the market? If it doesn't, then it's doing something different. So what I'm going to do here is I'm going to unfold the data literally the last 24 hours, and we're going to reevaluate. So let's just unfold the data bar at a time. It exploded further to the upside. Trade was still in play. It's like, okay, now there's a new swing high. So we can look at going low below this low over here. And there's a few other factors that we need to take into consideration. But the price just kept on going higher. So now it's voided the ABC count. Right? This count here, the reason why we have a question mark, is now been void. And what I mean by that is it's gone to a higher high. So we literally say void, like boom, no longer valid, right? It's not looking like an ABC correction. And now this is the art and science of trading, right? We want to have a mechanical way of viewing the market, the psychology of the market. So then let's just take the data up to literally where we are right now. This is the last bar as we are right now. Let's now get rid of this, get rid of this, get rid of this, and even this. And now let's just look at the market with fresh eyes. So I want to look at this part of the market over here with absolute fresh eyes. What does this look like to you now that we've got more information? Well, to me, it still looks like quite an impulsive waves because we're making higher lows and higher highs without the waves overlapping each other. They're not overlapping each other. So what is the logical high probability wave count? I'm going to use 2 degrees. And again, by the way, I've got an Elliott wave. If you're brand new to this, I know I'm talking relatively fast. I've got an Elliott wave masterclass, which breaks this down step by step. So everything that I'm covering today is in the masterclass, but more in an education format, so you can really understand the theory. And then what we're doing today is the practical, as in the description link below. So let's just look at this count. So now we're going to reevaluate and say, this looks like a wave 1, wave 2. That hasn't changed. But now this looks like the wave 3, as opposed to this. Because now we've got new information. This looks like a wave 4, and this looks like a wave 5. So this is the new count. This is also supported by the fact that the daily momentum, so we're on an hourly chart, by the way, the daily momentum is pointing down at the moment, which tells us we've probably got a local top, and then we're going to be sideways to down for maybe 3, 4, 5 days. And that supports this. One of the beauties with Elliott waves is multiple degrees of wave counts, which gives us valuable information. Now, what I mean by that is this wave 5 typically breaks down into 5 microwaves within itself. And that's what we're going to look at. So now, because we're going to get quite precise with this, so I'm just going to get rid of this over here, and then I'm going to zoom in to this part of the market. What do you see? It might be easier if I show you as a line chart. Do you see any particular pattern unfolding? Well, it looks like a textbook 5-wave sequence to the upside. So if we just look at this and we just draw it out, it looks like a nice wave 1 or wave 2, beautiful textbook wave 3, and ABC of a wave 4. I'm going to put it in the middle because we can either say, I think this one's slightly lower. Let's just have a quick look. It's actually bang on the same. And then this 5-wave movement to the upside here. And what we do is we just change the degree of count. So the degree of count is now micro. So it just makes it smaller. So now what we have, if I just zoom back out again, like this, and just to make it clearer for you, I'm going to do 2 colors. I'm going to change this to a dark blue. And we're going to have this one as a yellow or an amber. In fact, it will do, yeah, we'll keep it, it's more orange, right? It's more orange, right? So this is what we have. So we got 2 degrees of count. This in Elliott wave terms is called a wave 5 of a wave 5. Why is this important? Well, markets tend to move in 5s and 3s. And after a 5-wave structure, what do you typically get? Well, you typically get a 3-wave correction. So what we're going to anticipate next, and this will be highly probable, very, very highly probable, is some type of A, B, C style correction. Now, if we like zoom out, the whole anticipation, I did a 31-day follow me on BNB, and this coincides with all of that, is that the market is likely to go to all-time new highs over the coming months, not days, but months. So what can we do with this information? What can we do? If this is the case, the daily momentum is pointing down, the hourly momentum is pointing down, we got a pattern position that says it's a wave 5 of wave 5 high probability. We want to next see, if I can just zoom in over here, a swing low taken out to confirm. So what I mean by a swing low, this is a clear swing low. And if I just change this to black, if this swing low gets exceeded, that will be a very strong indication that this top will hold for that ABC correction. And then you can look for entry setups. If there's a couple of different entry strategies, you can enter down here with a stop loss up here or up here. There's a few different ways of entering this. But what we're looking at is what's the pattern indication, the pattern position that will tell us this is a high probability wave 5 of wave 5, and they were likely to get a macro degree, well, correction in the same color as the blue, right? Which is the degree of count, which in other words would mean this ABC style correction. What would be that indication? Well, a clear one would be this swing low. That would be a clear indication, and then you can look for an entry setup. I'm going to do one other thing as well. In my Fibonacci, in my Elliott Wave Masterclass, I also cover Fibonacci price. And one of the key things I'm going to cover with Fibonacci price before we wrap up is something called a retracement. I'm just going to zoom in a bit more like this. A retracement is, we're going to take this low. I'm just going to make sure I get this low. Is it down here? I'm just going to remove this for a second just so I can see the low. There we go. I'm going to take this low to high. And most corrections are a typical minimum of 50% and typical maximum of 78.6. So that gives us a nice clue that this is likely to go into this range. I've recently just launched a Fibonacci time course, so I'm just going to do this for you as well. Fibonacci time retracement. If this does end up being a wave 5 high, typical corrections take 38 to 62% of the previous move. So basically we measure this and we project forward 38 and 62%. So now we have a nice cluster over here to say that we're probably going to be sideways to down for at least 2 to 3, maybe 4 days, 2 to 3 days, 2 to 3 days, give or take. So there's some nice shorting opportunities, or wait patiently until, if, and it is an if, because there are only probabilities, never certainties, if this unfolds like this, there'll be some long trade setups over here. But again, we're just going to be patient for it. So the daily momentum's down. We got pattern on 2 degrees, wave 5 of wave 5. Now we've done some Fibonacci ratios. We can also do Fibonacci ratios to give us more confidence on why this is likely to be an end of wave 5, but we're not going to do that today. But if you want to learn more about Elliott wave Fibonacci, it's the best tool for reading the markets by far, and you'll see these patterns representing themselves time and time again. It's in the description link below. Take the masterclass and you'll learn a massive amount. I promise you that. So if you like today's content, we did a lot of detail today. Like, subscribe, hit the bell notification. Let's finish on a quote from my book. I'm going to go with a really relevant one because I was actually looking for shorting opportunities yesterday, but the market didn't do what we was anticipating. It went to a higher high, and then we just had to reevaluate. And that's the art and the science of trading. That's why, 3 out of 10 is what good looks like, as in getting it right 3 out of 10 times. 5 out of 10 is what the world elite in trading terms looks like. So Michael Jordan teaches us this best when he says, his quote, "I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed." So the art of trading is actually get your high probability setup, momentum, pattern, price, and time. Trade it without hesitation and reservation once the setup is in place in a confident, fearless manner, but without being reckless. In other words, we risk 1%, 2%, or no more than 3% to find out if we're right. If we're right, we make great profits. If we're wrong, we either lose what we risked, or we break even, or we make a small profit, depending on how you manage your trade. And that is all you need to do time and time again. So when Michael Jordan saw his shot, he took it. Doesn't mean it's guaranteed to go in, but it was higher probability. But he still managed to win 6 championships. And your job is to win those championships, but you have to take the shot. How do we get those shots in play? Is first we get the edge in our favor by doing our technical analysis. If we get the green light, we take the trade. And then it's all about how do we manage our insurance position, and then how do we really ride the wave if it unfolds as anticipated to maximize our profits. So if you like today's content, like, subscribe, hit the bell notification. Give me a thumbs up as well. I appreciate you. And I'll see you tomorrow. We'll see how BNB unfolds. I'm looking at a few other coins as well. So we'll just keep our eyes and ears close to the ground. All right, I'll see you tomorrow.